So, ladies and gentlemen, distinguished guests, and fellow climate warriors. Sorry, I'm slipping in the cracks here. When I say fellow climate warriors and friends, I look at people like Dr. Ma Zheng. I look at friends like Sean Kidney at the CBI, who we've been collaborating with over a great period of time. I have to say, just hearing these opening comments, I want to congratulate Hong Kong and all of you who've worked so hard to produce these numbers. At a moment in time when so many of the statistics, if you believe the headlines, the global headlines, it feels like everything is going backwards, but Hong Kong is very clearly bucking the trend. And it's a moment that we should all be proud of to kick off Hong Kong Green Financing Week. So I've been asked to say a few words on the topic of climate adaptation. It's been touched on a few times by the earlier speakers, but I wanted to share with you, maybe to set the scene, just a few statistics. And as we sit here in the midst of a typhoon, they aren't particularly positive. So I do commend those who are doing some research to try to put this topic on the map. It is nascent in climate finance circles, but AIB produced a report that suggests that climate adaptation requirements and the need to respond to all of the extreme weather events, if we don't do it, it will impact GDP by some nearly 20% by 2070 and up to 40% by the end of the century. Just think about that. Global GDP impacted by 40% unless we address this. And yet, the some 100 billion that is going to be needed per year between now and 2030 to address climate change effects, about a third of that, only a third, is being funded today, and less than 1% is being funded by the private sector, less than 1%. Now, if you step back and you look at all of these extreme events, what is happening and who's paying for it? As insurance is finding it harder and harder to make the case for responding, if it's not going to be the private sector, it's going to land on the lap of governments. And we just heard in today's panel that governments don't have enough money. So we need to figure out a way to change this equation. So that's the negative bit. Now the hopeful side. As we've delved into this and tried to make the case for adaptation finance, one of the biggest hurdles that we first come across when we speak to investors is, number one, they don't even know what adaptation finance is. We need to define it for them in very clear terms that can be adopted and embraced across the globe. Because unless we have a commonality of lexicon and language, we're not going to scale capital. The second thing that we hear when we talk to investors is, isn't that government's job? Well, I think I just made the case that there's not enough government money around to fund these enormous numbers, so we need to galvanize the private sector. And then third, and most importantly that we often hear, is I don't think I can make money investing in adaptation. Isn't that just throwing good money after bad? Well, interestingly, we did a research report that suggests that for every dollar in 10 emerging market countries across the world, for every dollar invested in adaptation, you get a 12 times economic return for that dollar invested. And that can be either in the form of disaster avoided or real hard returns by making the products, the goods and services that people need to buy, not just want to buy, but need to buy to address these issues. So I would posit to you that that is an enormously attractive financial investment, and that's the journey that we've been on at Standard Chartered to try to make the case for why these investments are needed. So how are we doing this? We've taken a handful of the thorniest topics, the ones that are really complicated, where we don't see capital yet scaling, where we have issues like policy hurdles, or we don't have a commonality of language, or we don't have any case studies that we can show people to give them confidence that we can replicate and get a good financial return. And we've decided to attack those topics by creating a series of innovation hubs in our organization, where the sole purpose of the teams in those hubs exists is to experiment, to collaborate, to pilot, and to test, and to find those breakthrough financial opportunities that we can then put out to our peers in the finance community, in the corporate community, to show them that these can really work. So those center around, first and foremost, adaptation finance. What's the role that we can play? Sometimes it's as simple as helping to define the market, and in other cases it's producing that very real case study that can be adopted and copied. Other topics we heard today, nature finance. These are, in many ways, they're transversal. They're not mutually exclusive topics. So for instance, one of the most attractive ways in some cases, very specific cases, that you can think about protecting yourself from a coastal barrier protection point of view is, as was discussed, Eric's mentioned it, planting mangroves. Much better solution, a natural capital solution, than perhaps a man-made concrete wall which degrades and doesn't feed the ocean ecosystem. So as we look across how all of these intersect with each other, innovation is the key common theme here in all of these topics, but in many respects they all lead back to the concept of people at a core and protecting and ensuring that we have resilient infrastructure, adaptable infrastructure, and that we can carry on with economic prosperity, which is something I think we all would collectively agree that we seek. So we wanted to maybe just share with you a case study or two on what do we mean by adaptation finance. Well, here's a very good example. We have a Chinese manufacturer that has historically produced very traditional solar panels. However, they have over time realized the need to produce a specific product that is going to address hurricane susceptible areas or heavy windstorm, sandstorm susceptible areas in the Middle East. So what are they doing now? They're producing these very, very specific storm resistant solar panels. Now, think about that. Isn't that a product that anyone in these areas is going to want to buy? Because the first thing that happens when a hurricane comes through, it takes off the roof and then all of a sudden you're off the grid. So it's these types of financings that are the very things that we're talking about when we are talking about adaptation finance, adaptation corporate investment case, and a very, very attractive return on investment. We've not just done this for manufacturing sector, we've also done this for financial services. So another case study that we have was us providing a finance facility for an insurance provider. Now you think, insurance is one of the ones of the industries that are under threat because of adaptation. We've worked with them to work with their underlying insured companies to ask those companies to take a handful of deliberate steps to make themselves more resilient. And if they do that, they become a better underlying credit for the insurance company, but they're also a great credit for a bank to provide a bank facility that they can draw upon whenever they have to pay out under parametric insurance events. So it becomes a very positive, virtuous circle. So another example of adaptation finance. So what we wanted to do here is to not just have this be resident within the research department of Standard Chartered, but what we wanted to do is create what I would call, in effect, a common good. And we produced what is called the Guide to Adaptation Resilience. We did this in collaboration. Collaboration is absolutely key with a number of other partners that you see here on the screen. And what we've tried to do in this report, and we invite all of you to please engage with this report, is we've tried to first define the market, and then we've put forth over 100 use cases of how adaptation finance could be deployed. And then what we'd love to see is anyone who's keen to engage on this, bring us your case studies, because the more that we can put forward in this living and breathing document, the more we can provide the roadmap for more capital to flow. And I would tell you again, 12 times ROI opportunity. And my last little anecdote before I close is that I always say, if you want to know where to put your money to work, ask the taxi drivers. So what happened when I arrived in Hong Kong early this morning? I get in my taxi, and of course we have to comment on the weather. And what does my taxi driver say to me? This is the 12th typhoon we have had this year. And I said, well, interesting and a little scary. What's the average? He said, oh, the average is six times a year. 2 times. It's obviously climate change. We must do something about this. That's your 12 times ROI opportunity. Follow the taxi driver's lead, and let's put our money to work on adaptation finance. Thank you very much.